Hello, Maverick traders. Welcome to the Market Roundup. Joe with you here on a Tuesday. It's the 8th of April. Let's jump into the market action. I'm looking forward to this. This is the 15th annual Maverick Trading Summit. It's going to be great to meet everybody. So the 26th and 27th of April is where we will be. So if you guys are interested, please register. We're going to be talking about using AI to make you a better trader. Looking forward to seeing you there. I'm going to take a look at the meaningful news of the day. We're going to take a look at these charts when it comes to the overall indices, technically to see where they're going. And if I've got a couple of trades to share, you know I will.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you're going to see that, let's just jump straight into the news. So the markets did gap higher. It's inevitable. But this surge to the upside actually collapsed. It was met with some pretty aggressive selling. And we also saw another push in the VIX back up above 50. Now let's just take a look at how we finished overall. Now the Dow was down 0.84%, just shy of a percent, but the S&P down over 1.5%. The Q's down 2.15. You can see it here. Oil dropped as well, and I think this is kind of a substantial move to weakness or fear. Gold up almost 1% as well, so definitely kind of a surge to the bear side. Let's take a look at the advanced decline line. 80% of stocks down today, 17 up, 92% below the 50-day moving average, 8% above. So this isn't very specific anymore. You know, a lot of traders were thinking about, oh, it's going to hit the Fab 7. We got a lot of profit taking, but this is generalized across the board. Let's take a look at the chart and see if we can get a little deeper here. Now, what I noticed was this gap to the upside. The volume over the last couple of days has definitely been higher, but when you see a drop of this magnitude this fast, based on whatever news it is, but a gap to the upside that immediately fails, we never even got a relief rally. Now, yesterday was a little bit weird. We did have a little bit of a news event that was questionable, but it doesn't matter where it causes it. What matters most is the sentiment and the worry of the majority. Taking a look at the size of the volume and the way that this thing fell right back down to these levels, I don't think that the move to the downside is done just yet. Before we get any sort of big relief rally. So kind of keep that in mind. Now, that's my 2 cents, but what I love about it is if you just follow price action, then our opinion does not matter. Here's the Qs. It did the exact same thing. You could see, look like, hey, that's it. We opened up here. Let's take a relief rally back up to this area, and then we can take a look at, another round of selling, right? Because this is definitely bearish. We're still glass half empty. But the way the markets reacted right out of the gates, a little bit higher and then just met with a lot of selling, said that the sentiment carryover from yesterday continued to stay bearish. Well, folks, I'm going to say it once again, it doesn't matter the cause, it doesn't matter the reason. Sentiment is what we follow. And price action states that we still have to definitely lean towards the bear side. Let's take a look at the heat map here, folks. And yeah, there are a couple of greens here. United Healthcare, we've got JP Morgan. It really is a coin flip here. You're just guessing. The majority of the markets are in a corrective action. There's a lot of reaction to the bear side. It becomes super difficult to identify what's weaker than something else that might be weak. I mean, you're comparing apples to apples here, or trying to guess where a bottom is. We refer to it as catching that falling knife. I've got a lot of great trades on the bull side that I like, and they all kind of rolled over. I've got some bear trades that are great as well. But this just isn't the day to make that decision. It was more of a reaction, I believe, off of yesterday's situation. Whether you believe it or not, what you have to follow is sentiment. Let's take a look at the VIX. So I went ahead and pulled this VIX chart. So we had this big move to the upside, and that is this kind of blow off top. If you guys are charters, you know that, hey, it's a gap up and it failed back down. So I would expect the move back down to the back lower. Now, the VIX should come down and the equity market should move higher, and it becomes a bear rally overall, right? It's just a relief rally or an oversold bounce. But that did not happen. It did not happen at all. In fact, it actually gapped lower, went a little bit lower, and then just shot up higher. So this volatility index actually closed higher than it closed yesterday. So understand that if you're measuring the VIX as a sentiment gauge, where we closed today was more fearful than when we closed the day before. You can't really make heads or tails of it, but what you can do is be aware of it and maybe stay away from it. So let me just click over here. This is what we do. This is our top-down approach, right? 1 day, 1 week, 1 month performance. I decided to kind of throw them all out there. And when it comes to kind of having a balanced exposure or building a portfolio when you got bulls, bears, and sideways, you just don't really have a chance here. It's just a general kind of flush out going on in the markets when it comes to sentiment. And I truly believe that the fear needs to kind of play itself out before you're going to get any sort of consistency in these markets. We just kind of find ourselves in a situation where these markets are still not done kind of purging themselves, trying to figure out who wants to jump and who doesn't. Not a lot of opportunity to even play said bounce because there just isn't one yet. Now, this volatility might get you excited and make you happy to, hey, maybe I've got opportunities to get into some bear trades here. A lot of this stuff is overextended, and when it does bounce, it bounces super hard. But what it can tell you is you don't need to be active until this kind of flushes itself out or stabilizes and we get some sort of area to where I can take the 1 day, 1 week, and 1 month and make heads or tails of it. There's really nothing emerging. There's really nothing that's sustainable. It's all pretty much just kind of a flush out. So it was pretty easy for me to kind of just drop this down to a -2. The gap up today in the failure and that volume associated with was pretty decent. I mean, keep in mind, it wasn't as high as the last couple of days, but the size of that candlestick, not even a chance to bounce. I think anybody that had a chance to actually get out of a position that they wanted to, this morning was the time. Just seeing that the sentiment actually drove it that far down means that I think there's still a lot of bearish momentum left in there. I'm not overthinking it, folks. Follow price action because it never lies. So another move lower today, kind of negating a gap higher, thinking we get 1 or 2 days of that oversold bounce. Usually you get some pretty good, seriously bull moves with bear markets. It was absolutely met with massive selling. VIX closes higher than it did the previous day. I don't know if that's going to carry over. However, it's just something to be mindful of. None of my bulls triggered, and the majority of my bears, if I'm not already in, just continued lower. So what to take from this is make sure that you find the opportunity, but to try to force something makes no sense. Economic reports, folks. We got jobless claims and CPI, PPI later this week, I believe Thursday and Friday. But I don't think it's going to matter. We're kind of in the reactionary mode when it comes to whatever tariff's going to be what. Anticipation is 50-50. You're going to be either completely right or completely wrong. However, when you follow money, when you follow price action, sentiment, higher highs, lower lows, whatever it is, it never lies to you because that's where the money's going. I'd rather follow here. Sometimes you can't follow on days like today. We might need to give it 1 or 2 more. So we'll see what happens tomorrow. So that's what I got for you today, folks. Looking forward to seeing what happens tomorrow because I get to chat with you again tomorrow. So we'll see if any opportunities arise. Thanks for joining me. Talk to you later. Bye, folks.